One of the most important aspects of the merger deal between Kioxia and Western Digital is how the ownership of the new entity will be distributed among the two companies and their existing shareholders. According to Reuters, the deal structure that is being discussed would give Kioxia a 43% stake and Western Digital a 37% stake in the combined company, while the rest would be held by their current investors. This means that Kioxia would have a slight edge over Western Digital in terms of voting power and influence over the strategic direction of the merged business. However, this ownership ratio could also reflect the relative valuation of the two companies, which have been affected by the downturn in the flash memory market. Kioxia, which was formerly known as Toshiba Memory, was sold by Toshiba Corp to a consortium led by Bain Capital in 2018 for $18 billion. It had planned to go public last year, but postponed its IPO due to unfavorable market conditions. Western Digital, on the other hand, has seen its share price decline by more than 40% since its peak in 2018, as it faced stiff competition from Samsung and SK Hynix in the NAND flash segment. By merging their flash memory businesses, Kioxia and Western Digital hope to achieve greater scale and efficiency, as well as better compete with their rivals in terms of innovation and product quality. The combined company would have a market share of about 33% in the global NAND flash market, putting it on par with Samsung, which is currently the leader with a 35% share. The merger would also create synergies between Kioxia's strength in 3D NAND technology and Western Digital's expertise in solid-state drives, SSDs, and data storage solutions. However, the deal is not without challenges and risks. The merger would likely face regulatory scrutiny and approval from several countries, including the US and China, where both companies have significant operations and customers. The deal could also face opposition from some of Kioxia's existing shareholders, such as Toshiba, which still owns 40.6% of Kioxia. Toshiba itself is undergoing a major overhaul, as it received a $15 billion buyout offer from a group led by Japan Industrial Partners, JIP, a private equity firm. The offer price was partly influenced by Kioxia's falling valuation, according to a Toshiba filing. Therefore, the deal structure and ownership of the merged entity between Kioxia and Western Digital could change depending on how these factors play out in the coming months. The two companies are reportedly aiming to finalize the deal by June this year, but there is no guarantee that they will succeed in reaching an agreement or securing all the necessary approvals. If they do manage to pull off the merger, they could create a new powerhouse in the flash memory industry that could challenge Samsung's dominance and reshape the competitive landscape.